The market's loudest lesson is wrong. Act when price explodes. Gann's quiet rebuttal. Wait when time congeals. In his private pages, he wrote that acceleration is noise, but pauses reveal the master clock. It sounds paradoxical, yet the law of vibration he cited is mechanical. Cycles accumulate energy in silence. Only after the count is complete does price obey. We open a forgotten notebook and find not prophecy, but procedure, days, weeks, and anniversary windows penciled with care, angles drawn from true highs and lows, swing charts noting overbalance and secondary tests. If you have chased a breakout and felt emptier after winning than after losing, this is why. You were listening to price, not to time. If patience over prediction appeals to you, stay with me. Authority is not charisma. Authority is repeatability. Gann's doctrine anchored risk to time. No entry without a time window. No exit without a timed confirmation. No opinion without a measured test. He saw two markets at once, the crowd's market of emotion and the professional's market of sequence. The crowd hunts excitement. The professional observes exhaustion. The enemy is not volatility. The enemy is our boredom. FOMO blooms when we refuse to count. Overtrading begins where calendars are ignored. In this film, we will restore the calendar. We will treat cycles as seasons, angles as rails, volume as a suspect witness, and price as an effect, not a cause. Our work begins by asking a simple, exacting question. What cycle are we in, and what confirmation must occur before we move? The notebook offers a rule. Mark the anniversary, measure the window, and wait for the secondary test to cross an old level in harmony with time. But one test still remains. We will name it, define it, and put it to work soon. If the secret is to wait, what exactly are we waiting for? Gann's private notes answer without drama. We wait for time to agree. Time is the master clock. Price is its echo. He mapped markets the way a navigator tracks tides by seasons, anniversaries, and measured intervals where energy renews or exhausts. The law is simple. When cycles synchronize, movement becomes orderly. When they scatter, movement becomes noise. Begin with the last decisive swing. Count the days it took to rise. Count the days it took to correct. Mark the anniversary window of that impulse, often 30, 45, 60, 90, 180, 360. Treat these not as dates but as confluence zones. In these zones, do not predict, observe. Boredom is the instrument. Watch for the secondary test. A market revisiting an old level with reduced range and quieter volume. Draw your swing chart. Refuse to act until the chart turns and the new swing crosses the old level. That is confirmation. Overbalance is the warning bell. When a pullback takes more time than previous pullbacks, trend is fatigued. When it takes less, strength is intact. Volume can deceive. Time rarely lies. A rule. Trade only when three conditions: converge time window, level of consequence, and behavior that confirms. If two appear without the third, stand aside. Risk is geometric, not emotional. Place protection beyond the secondary test's extreme. Reduce size when cycles disagree. Your posture becomes mechanical, measured entries, definite exits, orderly review. In the notebook margins, a line repeats: time dominates price. Hold that doctrine and impatience dissolves. You are no longer chasing movement. You are aligning with vibration. The crowd hunts candles. You count clocks. The next question follows naturally. How does the crowd betray itself inside these windows? And what tells the professional to wait one test more? The crowd does not lose because it misreads price. It loses because it disregards time. In the forgotten notebook, Gann notes that panic is merely a late echo of a prior cycle. The paradox holds. The tape looks urgent precisely when patience has the highest edge. Professionals work by calendar, angle, and swing. The public works by emotion, headline, and impulse. Time is the master clock. Windows open, seasons shift, anniversaries vibrate. When price reaches a level without a time allowance, the move is unstable. When time and price meet in confluence, structure becomes definite. The enemy is impatience disguised as insight, the impulse to act on the first breakout. the temptation to call tops and bottoms without a rule. The core model is simple. Track the swing chart, measure the overbalance of corrections. In distribution, rallies become shorter in time and smaller in distance. In accumulation, declines lose authority. A secondary test on lower volume near an old level reveals intent. If price crosses old levels during a time window but returns to retest on light trade, the market is shaking the crowd, not inviting professionals. Operate by rules. Do not buy a breakout that has not survived a secondary test. Do not short a breakdown without an overbalance in time. Confirmation. Align price with a cycle window weekly, monthly, or anniversary, and require at least 2 confirmations. Structure and time. Volume is a witness, not a judge. Mastery feels calm, almost boring. Boredom is a signal. Your method is working. Emotion is a cost. Your plan has leaked. Replace impulse with sequence, identify the window, mark the level, wait for the test. If the secret is to wait, what exactly are we waiting for? One test still remains. The angle must confirm the time. Without angle confirmation, patience upgrades to protective abstention. In the notebook, the paradox becomes operational. We measure entries by price, but the trigger belongs to time. A bar that looks identical today and next week is not the same event, because the master clock has shifted its weight. The method turns from philosophy to detection. First, define the window. Mark forward counts from pivotal highs and lows, weekly and anniversary dates, until recurring vibrations appear. Time builds the box. Price only chooses the door. Second, demand structure. Use a swing chart to record only changes of intent. When the current reaction exceeds the overbalance of prior reactions, the crowd's script has been edited. A change of character precedes a change of trend. Third, interrogate energy. Volume can deceive at the climax, but truth hides in the secondary test. After a drive, a low-volume retest of the level that fails to make progress. In accumulation, springs that return and hold are stronger than loud breakouts. In distribution, upthrusts that retest and stall write verdict in quiet ink. Rule: no trade without at least 3 points of confluence time window, structural shift, and a clean secondary test. Rule: entries belong as close to the tested level. Exits belong where the premise is disproved. Place the protective stop beyond the test, not the noise. Risk is measured. Prediction is optional. A Gann angle or 1x1 confirms geometry, but never substitutes for the test. Crossing old levels matters only when time agrees. How does mastery feel? Orderly, boring. You wait through emptiness until the clock, structure, and retest align. Then you execute with size and clear invalidation. The engine that once ran on emotion now idles in neutrality. Yet one test still remains. Can patience survive success? In the next chapter, we fuse method with temperament, so rules govern chart and mind. The work turns inward. Method without mind collapses under boredom. Mind without method dissolves into emotion. Gann's private notes treat psychology as a timing instrument, another wheel in the master clock. The rule is austere. Time your attention, not just your entries. You begin each session by plotting the cycle windows already known: the seasonal turn, the 90 or 180-day anniversary, the square of range projection, and then you plot your patience. In practice, that means a checklist held at arm's length from mood. Has price reclaimed and held the set insert, last broken level? Has the swing chart turned up without violating the overbalance? Does volume confirm on the push and diminish on the secondary test? Do 2 time vibrations form a confluence? If any piece is missing, you wait. Waiting is not empty. It is a measurable posture. You limit screen time, define the window, set the alert, and withdraw. In the quiet, the engine of discipline cools the system. Boredom becomes data. Exhaustion becomes a risk metric. When a setup appears, you size by time, not hope. Shorter windows invite smaller risk. Extended cycles permit wider, slower trades. Stops live at structural facts below the secondary test, beyond the last overbalance, never at round numbers. Profits scale at crossings of old levels and at harmonic time points, not at emotional peaks. The crowd seeks sensation. You seek confirmation. The market's cruelty fades when rules replace wishes. Peace is not the absence of losses. It is the presence of limits. The identity shift completes. From chaser to steward, from prediction to confirmation, from noise to rhythm. Yet one test remains before the notebook closes. Can you stand aside when every signal aligns but time has not? Because in Gann's code, time still rules price. This restraint completes the harmonic, measured, definitive operator identity. Here is the creed of the forgotten notebook. Time first, price second, self last. The market's master clock sets the work. We accept the schedule. Our method is definite and orderly. We map the cycle windows. We wait through boredom. We act only on rule-based confirmations. Prediction yields to confirmation. Noise yields to structure. Emotion yields to discipline. In practice, the law is simple. Trade only when time, test, and turn align. Time means a defined window, seasonal, anniversary, or harmonic count, not a hunch. Test means a secondary test of a prior extreme, ideally quieter, narrower, and on reduced volume. Turn means a swing break that crosses old levels and produces an overbalance in time or price against the prior minor trend. When those three agree, the angle changes and participation becomes logical. Stops belong beyond the test extreme. Risk is predefined. Position size is modest enough to make patience affordable. We pyramid only after the market proves itself by holding time and reclaiming structure. We stand aside when confluence is missing or volume shouts against the turn. The professional identity is measured waiting followed by measured action. We measure, therefore we can be calm. If a window passes without confirmation, the law says we owe the market nothing. The next season will open another door. If a signal triggers and then fails, we exit without debate. The failed pattern becomes new information for the next count. The moral principle is identical to the trading rule. Honor time. In honoring time, we honor limits, and in limits, we find freedom. The next study is risk. How to campaign a reblend, position across cycles without disturbing the harmony of the account. Until then, keep the notebook open and the clock in view. Wait, confirm, act, and then become quiet.